All right. Well, listen, I'm going to just kind of start a slower introduction. It is 10 o'clock here. So, um,
Go right ahead. Anything you want.
right, right. Well, listen, folks, we have Mike Johnson on. Mike's been with GoldenCare, boy, I don't know. Mike, how long you been with us? 25 years, 27 years?
23 years.
23 years. Yeah. So Mike started long-term care, I believe, in 87. So he's been around a while. Um, he's written a ton of long-term care, trained hundreds of agents, really good at what he does. And, GoldenCare has been offering you a couple different speakers and long-term care presenters. And so Mike is really a pro's pro. He has some really good stuff he's going to share with us. And so we're thankful that he's going to come on board and just kind of share some of his pearls of wisdom. There's never every number one magic bullet that helps every sales situation every time. But the more people you can hear, like a Mike Johnson, you can really pick up on some tips. So with that, Mike, I'm going to let you kind of introduce yourself a little more. I'll kind of turn it over to you.
Well, I'm so excited. I just can't hide it. I'm about to lose control, and I think I like it.
There you go.
All right. Here we go. I'm Mike Johnson. I work for GoldenCare. I love GoldenCare. Been around for years. This is me and my wife, Carmen. I'm the one on the left. Okay. Just me being the chef. I've been doing long-term care for 35 years, 23 years at GoldenCare, my home forever. Been a sales manager over the long-term care career division. 4 years as national sales manager at Cornerstone. I was state and a national trainer at Amex Life when it first started. Top agent at all of them. So I got a little experience in here. The thought process are the key to selling, in my opinion, when it comes to long-term care. We're going to jump right in it. Is to be an effective sales pro, you must have a repeatable and informative structured sales presentation by which you are solving issues before they come up. So if you can get one set up that way, the stress level for the client will diminish and allow them to focus better, and which allows them to make the decisions easier. This applies to all aspects of selling. It is best to solve the issue before it comes up, rather than when the answer may look like it's benefiting you. And subconsciously, if the people feel like, well, of course you're going to tell me this now because I'm going to buy it. But if you tell it ahead of time, it's built into their mind. Okay. For example, a lot of times at the beginning of a presentation, people say, well, this is long-term care. I know it's too expensive. I just don't think, it's us because we just can't afford it. There's a lot of answers that you hear out there because of one will say, well, you can't afford not to have it. And don't worry, we'll try to build something to fit your budget. I think those are either you're going to build a plan so inexpensive that it'll make it work and may not be any good, or you'll be contentious right off the bat. So I always like to say this, and this really, you determine how you feel about it. If they tell me long-term care is expensive, the first thing I do is say, Mr. Jones, can you make me a promise? She said, well, I don't know. I said, will you promise me if it is too expensive that you will not buy it? And they started laughing. Oh, I promise you that. Okay, great. That's all we need. If you can't afford it, just promise me right now you won't buy it. And that's the key, because if they feel you're on their side immediately, they're going to relax. They're going to listen to what you got. He told me if I didn't think I could afford it, not to buy it. So I feel free now. That opens up their mind. They listen better. They absorb more information. The more information they have, the easier for them to make the decision. Now, this is the recipe for a sale. So let's look at some of the ingredients. How to set an appointment. Well, how to set a real appointment, it varies depending on the type of lead you have. But if you have a lead that they requested some information, we're going to show you how to approach that. This includes all the way from how to set the appointment, why are they interested in the appointment, and are they suitable for the appointment. Presentation, the ingredients, how to sell it, how to cook it, the close, post-sale, and one key Q&A thing that everybody should have set up either in their book or on their website, your web presentation. When you're setting appointments, you're making the calls. I always call, and if I don't get a hold of them immediately, I leave a short voicemail. Something to the fact, Mr. Jones, this is Michael Johnson with GoldenCare, and you requested some information. I need about 3 to 5 minutes of your time to cover that with you. Can you give me a call back? If you make it so short and so easy for them, and the 3 to 5 minutes is not overwhelming to them, that's good. But now if you don't get them, you leave a short voicemail, then you send a text and an email, and you call and leave another voicemail. This is if you're not getting hold of them. Do all this in a couple hour times. If you think about it, if someone was calling you and they called 2 or 3 times and maybe even sent you a text, you would think a lot less of them being a spam more than somebody needs to get something to you. So like I said, make them think that the call is only 5 to 10 minutes. And for yourself, this whole initial call, as you're doing the suitability analysis, determine what they qualify for, if anything. So that should be your goals of your appointments and how you start off. Here's a script. When people start off, I say you probably want to know 1 of 3 things. You probably would like a quote, easy for them to agree to. You probably want to know what kind of benefits come with that. That's easy for them to agree to. And a plan that you can probably qualify for. At point in time, they say, oh, if they have health conditions, they're going to get worried. If not, they didn't even know they had to, but just giving control back to you. So health, as you probably know, Mr. Jones, health dictates what you qualify for and the rate. So you have the control now. It's kind of a takeaway. And what do people want? They want what they can't have. Okay. So great transition is, Mr. Jones, so if you don't mind, what I'd like to do is ask you a few questions so I can put some quotes together and then explain to you how they work. How does that sound? Okay. So this opens the door for all the questions you want to ask. Okay. And how do you ask them? Well, you want to what motivated them to want more information on long-term care insurance? You need to understand that. You need to understand these people like they're your best friend or your family member. Was it personal health change that motivated them? If it is, we're hoping it's not too serious that they can't recover and buy a long-term care plan too. Was it recommended by someone? Clarify whether their friend, a financial planner, a CPA person, and what was their involvement. A lot of times you find a financial planner and he told them to go buy long-term care. The other time you'll find a financial planner, and you might be one yourself, and they're having him shop the market because he wants to write him a long-term care. So just understand the involvement of whoever got them involved in this. And if you're doing Mutual Omaha and so maybe some other companies, family circumstance, were they taking care of their parents? With a family member, how did they know it? Well, a friend of mine needed care for his family. As more you understand why they're doing this, the better your chance you are. How many kids they have and where they live. For home health care to work, you're going to need family involvement. If there's no kids and no family, whether we want to believe it or not, home care is going to be short-lived. What do you want their involvement to be? That's the kids. How are they going to help? They say, well, I want to take care of me. I said, well, do they know that? Do they know that they're involved in that deep? Or would you rather them just control the care that's given to you? And you might already know that Alzheimer's, dementia, underwriting question for Mutual Omaha. Their financial situation. I always ask, for example, are you the homeowner? Do you have payments? Is it paid off? Do you have any other properties? Occupation. Let's say, for example, they said something like, I work at school. Okay. Well, if they're retired at the school, do you think the janitor's benefits would equal who's the board of director for all the schools? Probably not. So if they are retired or even not, you need to know what they did and what kind of benefits they got. I always heard that the benefits there were really good. Did you get a pension? Did you get a 401k or 403b? Did you get a lump sum? How did that work for you? You want to have a rough estimate of their liquid assets and their goals. And a lot of times in a regular presentation, that also opens up when you're explaining their suitability. There's another place to ask, okay? So once you get to the appointment, then the next thing you do is pre-qualifying the client. Get it right the first time. Review the medical information you collected during the initial phone call. Use your MU underwriting guide or company of your choice Send the medical info to the companies or GoldenCare you might write for a pre-qualified analysis. You want to get it right the first time. How many times have you ever wrote a plan with Moo and not Mutual Omaha and not get it approved, and now you can't take it somewhere else? So if you get it right the first time, you're going to be able to do more for the customer. Now, once you understand what your strategy, what it's approved and not approved, develop a strategy based on the information and do some test rates to give you an idea of what you're working with. Other plans can be met, especially some of the short-term care plans, okay, may come into play. GTL and Aetna both have great plans, okay. There's a presentation, and it's done in sequence, it's for a reason. The first thing, if you're into doing a presentation, whether you got a PowerPoint, a flip chart, or whatever you give, you need to develop as much credibility right off the bat. Your family life, your background, the company's ratings, and what you represent. All these are things that they can feel comfortable with because their name, you're letting them know more about them. Then you want to talk about what an average stay is, what an average cost is, what your average is, how often do you need it, how long is this normal stay, present cost, future cost. If they're 50, they need to know what it's going to cost when they're in their 80s or 90s. Same thing right here, 60, 70, they need to know when they are more likely going to need it and what the cost is going to be then, so they can strategize whether or not they need inflation protection or they've got millions and they can co-insure. So you need to know, again, where they're at. Once you've done this, explain the process. You explain to them that you are determining your suitability. And if they seem suitable, we'll help you design an application, then submit an application, and review the issue plan. Is this a reasonable process? Right in the middle of the presentation, you're doing a trial close. And one of the things I don't see explained very often is if people do not understand the process that is going to come right after they say yes, they're less likely to say yes. So if you explain to them the process that you're going to do an application, you're going to help them, we're going to submit it, it takes a month, 2 months long, blah, blah, blah. And they understand everything that's involved. And you say, is this reasonable? Okay, it's like the Socratic method. You get them saying yes. And they go, 95% of the time when I get to this point in my presentation, they say yes. Okay. Now, once they've said yes, you got to light the fire. Create sense of urgency. Show them what the cost of waiting will cost them. Any future health concerns. Remind them this is a window of opportunity that may not ever come again, and it definitely won't come at this price. Because you know as well as I do, if you wait 10 years, you'll end up paying twice as much money over a 10-year period than you would a 20-year period if you bought it 10 years earlier. So there's plenty of cost of waiting charts out there. Then you want to explain to them how long-term care works. The progression of care. 70% of all people start out at home, but then it develops into assisted living and into nursing home care. Okay. I've seen a lot of people that don't ask much about the rates, but you want to let them know about it because when they get done, they're going to start telling their friends, I bought a long-term care, and someone's going to say, my aunt had a long-term care, or my mother had a long-term care, and the rates went up. But if you can show them that the market is stabilized, okay, then they're going to feel a lot more comfortable about making a decision and defend themselves when they're out in public. If someone says, yeah, that stuff raises through the roof. Well, it did, but for anything written in the last 18 years really hasn't been subject to rate increases. And there is why does long-term care work best? The ratio of claims. If you look at the ratio of claims, 51% of all claims are paid in a nursing home, 30% in assisted living, 4% in alternate care, and 15% nursing home. And Mutual Omaha's ratios are even better than that. And if you saw on the first page, I'm sure you'll get a copy of it. All this information can be obtained in the 2 locations I put on the front of the presentation. Now we're closing. LTCI final close. Design the plan, qualify their confirmation. A lot of times people say yes, but they don't mean yes to buy. They mean yes, I understand. So I always ask them, says, so what you're telling me is this looks like a plan you can be comfortable with and it's affordable. So you want to qualify the confirmation, make sure they're at the place where hope they're at. Again, this time you want to maybe go into more detail. You want to show them the underwriting process, okay? And then would you like to see what you qualify for, okay? And if you've done it right, you've answered all the questions all the way through and brought up the ones you didn't even want to talk about, I guarantee at least half of them will say, well, yeah, I can do that. So that's a really good closing. But not everybody says yes right off the bat. So let's talk about the next thing. You want a plan that sticks, just like my wife's pancake. That's my wife. Basic plan, long-term care insurance is part of an overall plan. You should be preparing your home, where to live, finances, things like that. So try to cover the cost of assisted living and home health care. 85% of claims are in assisted living and home health care. So if you've got a nursing home in that area that's $9,000, you don't necessarily have to cover the 9. If the assisted living's 5, cover the 5 and as much of the 9 as it's affordable and reasonable for him to take care of. You got to let them know they can copay with the nursing home because their lifestyle changed. Their lifestyle will change from them going buying clothes, out to dinner, running around in the car, to they're in a facility 24/7. They're not buying new clothes every day. They're not going out to food, and they go into entertainment. Their lifestyle has changed. That's going to lead a lot more, extra money for them to spend as a copay. I like using shared care on my plan because it follows the progression of care. I like using the 200% because 1 year skilled care on top of basic home health care, especially if you don't have kids involved with the reduced home health care. Partnership is wonderful, fantastic, but don't get too excited about it. I talk of it as more of a safety valve because you talk about it too much and then they can't get approved with it. They're not going to be as open for any other product you might want to talk to them about. You need to show them what the benefits will look at their age 80. Like a rule of 72, if it's 3%, it takes 24 years. 4% takes 18 years. 5% takes about 15 years. The most common plan I see people write is a $5,000 nursing home, $3,500 assisted living, $2,500 home health care with a 200% pro care on it, $150,000 max, 3% compound lifetime, $532. So you got somebody looking at you like this, and they say they want to think about it. 80% of the time, that's going to be money. So how do you drop without losing the power? Let's show you. And this program here, you got lifetime benefit growth 3% at $532. If you just move to 20 years, that means their benefits will increase into their 80s because they're 60 years old and they live in Georgia. At 2%, okay, that will drop it from $532 to $350. That's over $2,000 a year lower. I think there's a lot of sales between $350 and $532 that you'll lose if you don't get there. If you go to 1%, it's $283. I rarely suggest ever below 1% because you want the buyback option. The buyback option, which they call the buy up option, gives the insured may increase their inflation protection to policy benefits max 5%. That's for the lesser of 20 years to 75. So I tell some people, so listen, if we do it like this and you go to 2% for the next 15 years to your 75, you'll be able to buy back any of that inflation that you left off. In fact, you can buy up to 5% each year. Okay. Now it'll be a little higher. I said, but first of all, your view at it may be stronger that you now understand you're not Superman. And second, you may have paid off a loan, a house loan, a college loan for your kids, you might be in a better situation to handle it. So most people say, oh, I love that. I can buy this back later on. So they get this affordable now, and as their home gets paid off or things change, they can buy back the benefits that they let go. You want to try as a general rule to extend that period goes to age 80. Even if you're at 65, go to 85, because the difference between 15 and 20 years on somebody around 65 is very minimal. If you're 70 older, I try to use 1%, but zero. Well, what you can do is increase the monthly benefit. So instead of going 5,000, you can go 8,000. But if you have no inflation protection on there, it's going to be a very reasonable rate. And the occasional short-term care would come into play. So closing the call. Okay. Closing the call, after arriving on a plan that is comfortable for them, conversation may be positive, but not have said, write it up. Okay. I always say, let me offer you a proposal. The reason why is, if you're ever in a conversation and you're trying to buy something, someone says, let me offer you a proposal. Don't you feel like he's trying to go out of his way to make something better for you? You know, like someone says, well, let me offer you a proposal. Oh boy, here we go. We got a deal coming. Everyone will want to hear that. It's like they're going to go that extra mile to help them. And basically, you just review the process again. Review the application, but easier for them to decide if the process is clear in their mind. We're going to submit an application. It's going to take you 6 to 10 weeks to process. If you're turned down, you've got no money spent, so you're not exposed. However, once approved, we will review everything to make sure you're comfortable. And at that time, we have 30 days to make any changes. Now, does that sound workable? This works. I really don't know what the percentage is, but I would say at least a third of the time, if not more. Okay. And here's another thing that's real important. So that is my presentation and how it was structured. You will all get a video on this, I'm sure, if it can be of any help to you. But I have also something that I recommend now. There's a Q&A section. I think you find the tax deductibility of long-term care. That's available to you in one of those 2 locations. If someone asks a question and you can show them what their tax deductibility, they don't have to say, listen, let me get back to you in a couple of days. Don't check out and see what my tax deductions would be. You've got the answer. If they want to know more about the partnership, if you're on a website, you can have them. Otherwise, you can order one through your Mutual Omaha website. Stratecision. Stratecision, you can do price comparisons with any company, GTL quoting, but the price comparisons helps you understand, and it also helps you understand the policy, because if you click on the the Stratecision, and you go right down the line with the benefits, it'll show you what those benefits are, not only for Mutual Omaha, but any other company that you're working with. Okay. I always try to have a pro and con of traditional long-term care. Like traditional long-term care is more flexible. It has, it's less expensive. It's more better for tax deductions than hybrids, but they're better for underwriting. They're someone's getting paid. Rates are guaranteed. There's different benefits for each. But I would have it out where you can let them read it. And this goes back to a point. If you're telling somebody something, generally within an hour, they'll only retain 10% of it. Okay. But if you tell them something and show them something, the retention goes to 30%, which means that you have a 300% chance of 300% more knowledge in their mind to make a decision. The more they understand, the easier it is to make a decision. That's why answers in the air really don't do you very much good. You need to show them something in writing. State applications are where you can see where the rate histories are. Okay. And you can do it when you're doing an e-app. There's a place right there where you can click on it. Medicaid spend down. You need to know it, and you need to have some documentation. Reciprocation. If they're going to move, you need to know what it looks like for the other states. That's really not that hard. And then I would accumulate any miscellaneous long-term care articles. You see them in newspapers, magazines, wherever you want to research. These are some great things that are help you handle the information there where you can close them quicker. Sometimes quicker isn't always better. Sometimes you have to work it 2 or 3 times. But if people have all the information they can possibly use, they're going to be much easier for them to make a decision. So the icing on the cake, or the sell, is post-sell activities. What can you do afterwards to make sure they keep it? Okay. Well, you always want to send a quote of their plan, a brochure, state specific, their application, a HIPAA wet signature form, partnership for their state, and what's next pamphlet. You want to get them involved too. I always ask them if they know if their doctor takes electronic signatures. Most of them will not have any idea. But you call them and tell them, call your doctor. If it's in the daytime, they can call them right now. If they take electronic signatures, then your electronic application is fine. If they don't, have your client call to see if they have a form they use. If not, that's why I include this HIPAA wet signature. We've included a wet signature for them. If your doctor says he wants a wet signature, I've included this in your package where you can sign it and send it right back to me. Okay? So the more you get the people to do for you, the more they want to do for you. It becomes a team effort rather than just your individual effort. Follow-ups, keep them in the loop of the underwriting process. You know, what you need to know, any additional information. Let them know it's working on it, that if it gets caught up, where is it caught up? Generally, you're getting the information from the doctors. Email them on a regular basis to see how things are going and ask for referrals. I kind of like mixing these two together. If you're talking about underwriting, you say, listen, this is how I will work for you, you know, that kind of thing. And if you don't know about it, cool. Set up cool membership so that they can receive emails from it. You want to set up a cool membership for them through our Care Options Online. Then every month, they will get a letter talking to them about long-term care and referencing your name. Steve Shea is one of the people that work here. He signed me up through him. So every month I get a letter from him, Steve Shea, saying, you know, here we are, we're talking about long-term care. So that's a really cool thing to do. That will let them, if you like to sell many products, that will open the door for so many other products as your name's in front of them every single month. Okay? So, long-term care, kit for success, knowledge. Study your products. There's nothing more impressive than knowing your products. Then inspiration. That means you're inspired to work, define your activity. I'm going to devote this many hours to prospecting, this many hours to selling, and always work on your technique and your activity knowledge. Hopefully this here today will increase your activity knowledge. Thank you. Now go get some success. This is Michael Johnson.
You know, Mike, yeah, what I do here, thank you, Mike. This was good stuff, Mike. You know, I learned a few things too, you know, and I like the way you go through it. You're more or less telling me it's a great idea to do it and make it their idea. So
this just tells them how to build their own presentation.
Right. So I thought that was really good stuff.
Or even understand your presentation better. Yeah. And everybody who's still there, thank you very much.
Right. Thank you, everyone, for coming on board. I'm going to go ahead and close this, but give us a call at the marketing office if you need anything or any other questions. 800-842-7799 is our number. Give us a shout anytime if you need some help. And I want to thank you guys all for coming on board today. Thanks, Mike.
Check out our website, goldencareagent.com, or give us a call at 800-842-7799.